this certainly applies to our stock of the day, corporate travel management. Of course, when we're talking about travel and how it has been affected over the course of the past few years during the pandemic. Now, it's in focus with the competition regulator, the ACCC, to conduct an informal review into its acquisition of Helloworld late last year. And corporate travel clinched the business arm of Helloworld for $175 million. Shares sitting pretty flat today, as you can see there. So, what do our experts think? Mathan, is it set to take off? Is it in a holding pattern? Save me from these bad puns. What are your thoughts?
They are pretty good puns. Look, we were on that play last year. We actually played it through Flight Centre and Webjet because the reopening cycle was playing out. And the interesting part about Flight Centre and Webjet is they're probably one of the top 10 shortest stocks in the market. So when the macro turns, you get short covering, and these stocks move quite a bit. And Flight Centre, for example, ran from I think $14, $15 to 20, 21. And at that point, the problem that people forget is a lot of these stocks, especially travel stocks, had to issue a lot of shares to stay afloat, to pay their bills. So in that context, they diluted their shareholdings quite a bit. So even though the share price doesn't actually get diluted because it doesn't attract a dilution because it's the way you do it, the number of shares for someone like Flight about $20 was actually bigger than the pre-pandemic level. So you have to actually look under the numbers to work out how much the capital, I suppose, raisings that are played out in different ways and how the market cap sits and where you are sitting. Corporate travel obviously has the premium brand on it. It's got the corporate travel business, which is the high margin play. Historically, there's been issues about whether that's sustainable and so forth. Again, it's bounced back. You're talking about a stock that's pretty much near the peak, and travel is going to be patchy at best. I think a lot of corporates have actually got used to doing Zoom. I mean, I do more Zoom in the last 12 months than I've probably done in my whole life, any kind of phone conferencing. So in that context, everyone's got used to it. Everyone's doing things from home. Everyone's cutting back on transportation. And especially with virus re-emerging every so often, it's going to be a tricky play. Now, for me, where corporate travel sits, for the multiple it is a high growth stock. So it's a high growth stock with the upside. Most brokers have it, you're only about 10, 20% upside. So what are you buying it for? You're buying a high growth stock that you are assuming over the long term will continue to deliver and continue to deliver well. I'm not so sure. I think the sector's got a couple of tough years ahead, and I think there's a lot more competition. And just like Helloworld, the industry is going through a fair amount of consolidation. So the guys who are left behind are going to be pretty decent size, and they're going to compete. And these are going to be global players competing. So I think it's going to be tough. If I had to pick a turnaround openings cycle play, corporate travel doesn't sit on the top of my list, probably not in the top 10 or 20. So in that context, I wouldn't be jumping in. I think it's really hard. I would wait for a period of time while all of this Omicron plays out. I don't know how long that will take. And when that turns around, I'd be looking at things like Flight Centre and Webjet because they're much discounted for the risk that they have. And if you can pick them up around $12, $13, for example, Flight Centre, and you're willing to ride through the next cycle, and when the reopening comes, you'll get another run up. But for corporate travel, I think the risk return is just not there for you.
But if you already hold the stock, do you continue holding it?
Yeah, that's the interesting part. If you held the stock and you've had a decent run, and I think management's done okay. I think it's going to be volatile, but I think they'll do okay. And I would hold through it. But if I had to pick 10, 15, I'm not picking it. But, if you held it through, it's a hold.
Okay, fair enough. Andrew, your thoughts, and I guess also with that deal that it's done recently with Helloworld?
Yeah, look, so corporate travel management has an excellent history. Management has delivered exceptionally well, but I'm going to echo many of the points that Mathan just made here. I mean, what you want here is a favourable asymmetry. So the market's actually been reasonably sensible in trying to look past a lot of these troubles that we're having right now. They are hopefully transitory, so it is sort of right to look past all of that, but that's it's kind of that play has sort of been done now. And now, and we've also seen how fast moving and dynamic this whole situation is. I mean, what other variants will crop up? Is there a new normal with internet meetings, et cetera, et cetera? So it's not that I think it's a bad business. I think it's an exceptional business. I think it'll be around for a while. I think they've got a lot of potential. It's kind of in the price, as Mathan's sort of saying there. And I just don't know that you're going to get exceptional returns from this point forward, especially with just how fast and rapidly things can change here. I remember in 2020, there was as you can see on the chart there, a massive fall there, and the market rightly said, this will pass. As soon as we get past this, everything will be okay again. And then, we had various strains, and then it just so on and so forth. So it's kind of, yes, we're all sort of saying now, once Omicron is passed, it'll be fine. It's like, well, I don't know how certain that is. And again, I'd reiterate the point that this business is going to be around for a while. Corporate travel as a category is not going away. Absolutely, it's not. And exceptional management, all of those kinds of things. But you want, as an investor, you want more upside than downside. I just don't know if that's there at this point in time. I want a much more attractive discount if I was going to buy. So for the same reasons as Mathan, it's a pass for me.